Welcome, all traders and investors. This is Anthony with Technical Market Insights, where we let the stock charts tell us how we'd like to put our money to work and where we want to put our money to work. And ladies and gentlemen, this is our weekly analysis where we're going to look at what happened last week, what swings we're waiting for, because that's what we do here. We capitalize on swings in the market that can take place anywhere from a couple of weeks to a couple of months. Not trying to day trade, get rich overnight. Been there, done that. Been doing this for 23 years. And this is what I found works best. Is exactly what I teach in my books and on this website and on this channel. So let's take a look at what happened in the overall sector indexes. So the biggest winner for the week last week was the real estate sector. Looks like it was up 4.6% that week, but just it did 2.63% on Friday alone. So Friday was a big gainer for it. And as you can see, it's been kind of creeping up after it crossed under the 200-day. And now we'll see if it ends up trending above the 200-day. But as always, we look at 200-day as our health indicator. And when it crosses under the 200-day, which it did up here, we would have got out and stayed away. When it was over, that's when we would have been capitalizing on swings. And if it rallies over the 200-day and starts swinging again over the 200-day, that would be the time to start getting involved in that sector and look for some possible swings. Let's just give you an idea of some of the stocks in that sector. Let's take a look at some, 66% change after a huge drop. Let's take a look at some of the other biggest. You know what? I don't think I have the bullish. Do something here, and we'll see what bullish stocks are in this category. Those are the only ones we like to look at. What's bullish? I don't care about the crappy looking stock charts. So really just a lot of REITs, real estate investment trusts. Most of them pay dividends. Most of them do pretty well for income. But you got to be careful and do your research. Make sure you're getting in a good one. We've done a video on two of our favorites, which is Welltower. Pretty bullish chart, worth adding on the pullbacks. And once again, if things change and it crosses under the 200-day or something happens we don't like, but healthcare facilities, if I'm investing in real estate right now, those are the type of facilities I want to invest in because, when people get old, we're always going to need hospitals and we're always going to need retirement facilities and nursing homes and places like that. And that is, as far as I'm concerned, if I'm looking into real estate, plenty of good places to invest in real estate, but those are the places I'd put my money. This is another one right here, one of our favorites. This actually pays about a 9% dividend, where the Well only pays, my favorite, let's see what Well pays. It's definitely lower than that. Yeah, it's roughly 3% dividend. But you kind of got to take into account the growth of the stock as well. Right? If I'm buying just purely for dividend, this would be the better one. But it is over the 200-day, starting to set up a bullish chart. Right here was an earnings drop. Keep an eye on that. If it breaks under the 200-day, hey, we're out. No love lost. Now, if you're doing it just purely for income, if I want to do something for income, it's going to be an ETF. So this right here, this is an ETF that is in a little bit of everything. Now here, the chart, don't get me wrong, I wouldn't be buying this based on the chart. All right, there's no way. But I think it's roughly always paid about 6 to 7% income, 6 to 7% dividend, and it pays monthly. If you're building a position in something like this, now this is invested in a little bit of everything. Real estate, it's invested in everything from REITs to oil to banks. Now here, it's definitely got an ugly chart. But I personally, I invest for a little bit of growth and a little bit of dividend. Anyway, let's jump into the next one. The real estate was hot last week. We got basic materials sector. See what was in that. So you have these companies that are just really chemical companies. I need to put the bullish thing in there and kind of keep it, but just to kind of give you an overall aspect, you had a lot of just chemical companies, paper companies in that category. That was the second hottest sector last week. Overall, the market, the biggest winners was XPY and DIA. Now, Dow Jones and USDOW is one of our favorite ones to capitalize on the swings. Same with SPSL, XPXL, and SPY. And those had decent weeks. If you were in them. Really, the only thing that was down last week is USO oil, which is dropping under the 200-day moving average, which it's crazy, which is why I don't pay too much attention to fundamentals until I like the chart. But if you look at the fundamentals of oil, you would think, I can't really say that because I don't pay attention to the supply chain. But with everything going on around the world, usually oil will rally pretty high in times where we got two wars going on. And it has over the, see what it's up for the year. It's actually down for the year, which is surprising. But then again, it did rally since Biden's been in office, so a little flat year. And geez, look at this thing. Anyway, so SMH, that was about a flat week. All right, we have a semiconductor. It's up almost 60% for the year. I'll leave that open. But last week we've seen a small decline, but as I said before, be cautious. I don't want to say cautious, but be aware this is close to being oversold. Even though it hasn't pulled back much, it's touching your 20-day moving average, which is in the middle of the Bollinger Band. And it could find support there and support right around here. I mean, it has been a monster, and it could continue to be one. I mean, this thing could rip up to 180 this 2024. I mean, you got NVIDIA. It is oversold, which is very heavy in the semiconductor ETF. And honestly, it will probably bounce. I don't see a lot of, naysayers on this stock. I believe the PE is, it's already $1 trillion company, and the PE price to book is 30, which is pretty overvalued. PE, I think, it's a trailing PE. I think it's actually more than that. 52 on here. Check your brokerage to be more accurate. But yeah, that's crazy. But a lot of people, pricing in AI chips. And be careful with that because it can be a competitive market. A lot of people are looking for other companies to step in and kind of take up the room where NVIDIA has been dominating. All right, so really, guys, on the overall market analysis, everything, if you look at the stochastics, it's overbought besides SMH. Dropped back. I mean, personally, I'd like to see it hit the bottom Bollinger Band and completely oversold before I trade it. But just, pay attention to that. It could definitely rally up back to all-time highs in 180. You wouldn't think in this environment, but look at this monthly chart. I mean, if this thing breaks out, that's going to look crazy. I definitely expected. Now here, we expected a green month in November. Didn't expect it to go all the way up there. I expected it to stay on the trend line and kind of trend down to hit the 20 bar moving average, which is now about 130. And we may not see that. We may see this sucker take off. Hey, just have a strategy that works, and you'll be able to capitalize on the swings. It's all that really matters to us. It's always going to be swings, ladies and gentlemen, and we're always going to be looking for them to make a profit. But everything else you can see is Dow Jones is oversold. Or I'm sorry, overbought. and it's really on every chart. So if you look at the daily charts, the weekly charts, the monthly charts, I mean, everything is overbought and really extended on. A lot of resistance on the monthly charts, the weekly charts. So I'd be cautious. I hear one thing to keep in mind right now is it is the end of the year. Usually what happens is if something's up, let's say yearly, 58%, 46, if you sell that position, if you're kind of a long-term investor and you've been holding all year and you're up, decent for the year, and you sell that position, you're going to have to pay taxes on it. If you don't sell that position, you don't have to pay taxes on it, at least for this year. If you sell it next year, you'll have to pay them, but you get what I'm saying. So some of the losers may go down just for people trying to actually get losses to write off, and some of your winners may continue to rally. At the end of the year, I'm usually out of the market by the end of November, maybe December. Not my long-term position, but definitely trading just because it's kind of a weird month. I usually just tend to celebrate the holidays, not really focus on making profit in the market. Do watch it, but here's some of my favorite winners for the year. These are stocks. Now this one is one I'm watching. Definitely will be entering this on its next oversold position as long as it holds the 200-day, which I feel like it will. There's some other stocks in that category that I see people pumping, but when I look at the chart, when I look at stock charts in cannabis, this is definitely my favorite chart. Somebody sees a better one, let me know. But this one has rallied over the 200-day. I've kind of checked into the earnings. They do have a positive cash flow. It's not showing up here. So this is an ETF. This is a water ETF. Definitely have not been in it, but I do watch it because of this company right here. This is my favorite company in that sector. And man, been in it for a while. I know we kind of dipped out and then got back in. But this is banged out 150% for the year. I have not been in this all year, but this is definitely threw a little money in that. BWXT, definitely been in that since January, up 35%. Nuclear energy up about the same. This is an ETF. So anyway, that's not really, I have no plans to look at that in this video, but overall, ladies and gentlemen, going into the end of the year, everything's kind of overbought. So I'm patiently waiting on my trading account or for any of my long-term investment accounts for the market to pull back, my positions to pull back to add more or to start a position and get ready for a trade. So going into next year, I think we're going to have some lovely trade opportunities. We will be doing an account where I am going to show you how to basically I grow small accounts into big accounts. It is a process I feel like everybody pay attention to as far as growing your accounts, because a lot of people think they only got $1,000. They got to trade it and hope to turn it into two in one trade. That is not the case, ladies and gentlemen. If you got $1,000 account, you need to trade it like it's $1 million account. And what I mean by that is by percentages of position. So if you got $1 million and you're about to buy a position, you're not going to go $1 million in a position. You're going to go maybe 10%, 20%. Probably more like, just depends on your goals and what you're doing, but you get my point. So if you got $1,000 account, don't think for me to make any money, I got to go all the way in on this. You need to be focused on percentages and trying to grow that account, and you'll grow your profit on those percentages as that account grows. But you're definitely going to not risk your entire account on one trade, and you'll be able to manage your position better. Anyways, we'll be starting that in January. And I see a lot of channels and a lot of people out there. Hey, follow our trade alerts. Hey, do this. Hey, do that. But you know what? I don't see anybody putting results out besides maybe one trade, two trade. I don't see anybody putting entire accounts out transparent on what they're doing. And that's what I want to make this channel as transparent as possible. Because, hey, I'm going to be teaching my son this stuff. I wouldn't teach him this stuff or have him doing this. He turns 18 in January. He's going to open up his first brokerage account, which he's had a custodial account since he was born. So he's not going to be really messing with that, but he's going to open a custodial account and be following these videos in January that we're going to start just on growing an account. And I'm actually quite excited. Anyway, enough blabbling. I'm sure I've done bored you to death. Make sure you hit subscribe. Stay tuned. Leave some feedback. Tell me what you'd like to see. Real quick, we'll check oversold, bullish stocks. We got a utility company. That's been killing it, honestly. I would kind of dig into that company. I mean, it's killing it now, and if rates do drop, it's only more bullish for the sector. And that sector alone has been down. So that may be a good longer term dividend type hold, even though it's only paying about 1%. I just like that chart, ladies and gentlemen. That been moving pretty good. Not sure if it'll continue that way, but worth doing some DD on. And then we got another technology semiconductor, Broadcom. I mean, this has always been a really good company. We've covered it, I believe, many times on pullbacks of the oversold territory. And you see that once again, which is why, even though SMH is not pulled back to oversold, I think some of its companies in there is going to start rallying, and you'll probably see SMH continue to grow higher. Definitely worth checking that out. See, the price is up 66% this year. DEG is up 40% this year. It pays about a 2% dividend, actually. Price to book 16, which is a little overvalued. PE is 26. Usually price to book, you want to see about 1, which, I mean, don't pay too much attention to it because I don't want to say that. Just do your research. Definitely worth paying attention to. And let's see, NVIDIA might be another buying opportunity on that. And that company is dominated, really, 220% this year. Another technology company, I like that chart right there. That is APPF portfolio. Man, 78% this year. We were buying on those pullbacks. Nice. See what the price of book is on that. PE is pretty, the rough PE. I have to dig into those earnings. And you got not too many out there, ladies and gentlemen. Out of the entire high cap 1000, we got 20 oversold bullish companies out there. Meta's one of them. Maybe a good entry time for Meta. Google, a lot of them's tech companies. So take a look at it with the overall market being overbought. Besides SMH, you are going to have a lot of companies that are not hitting the oversold bullish territory right now. So we'll always be looking for opportunities. Once again, make sure you stay tuned, subscribe, turn on your notifications, leave me some feedback. Ladies and gentlemen, I'm never going to show you anything flashy. I'm not going to have a big studio, do some fancy videos. I'm not going to go rent a Ferrari to videotape and try to sell you some gimmicky bull crap or go get a big pile of cash out and put in front of me. I'm just really trying to teach what I've learned over the last 23 years because I think it's worth it. All right, I didn't just make this up overnight. This is something I've spun my wheels for a long time, took a lot of losses, made a lot of money, and put together a strategy that has worked very well for me. And that's why I do this. And really, it's because people's asked me to do it. Something I want my son to be able to watch is, I'm teaching him. He can go back and watch the videos and kind of do it himself. But yeah, you won't see anything flashy here. I'm not going to try to, do any tricks or any gimmicky crap to make you think this works. This is just content that I feel like speaks for itself. If you don't think so, leave me some feedback and let me know. I'm out.